Today, brought to us by Loan Vision, one of the TMC's stellar preferred partners, is Branch Out, the importance of communication between branches and the finance department. Joining them are two TMC lender members and very old friends you'll know just from the camaraderie as soon as these guys start talking to each other. We've got American Pacific Mortgage as well as Gold Star Mortgage Financial Group. Jordan, if you can go to the next slide, thank you. TMC Connect is one of our platforms. We've got several different communication platforms that you guys can check out. Please continue to come back to TMC Connect as we do update these regularly. We've got Ask TMC as well as TMC Benchmark. And if you want any more information about those two platforms, please talk with your member engagement team. One more time. Thank you so much for 12 days of TMC. Please, this is a shameless plug to bring your friends and come and join us for December the 1st through December the 18th is our virtual event. Would love to see everyone there. Before I turn it over to Jordan to get started, just a few housekeeping rules. I wanted to let you know that whether you've dialed in or you've come in through your computer line, everyone is muted. But we do want this to be an interactive session. So please use the chat or the Q&A function to send in your questions, and Carl and Jordan will be fielding those during the conversation. This will be recorded and will be provided to all attendees and registrants tomorrow with instructions on how to get the recording as well as any follow-up questions that might not have been able to be addressed during this call will also be provided to the discussion leaders for their attention and answering. So without further ado, thank you again for coming to TMC Connect, and I am going to turn it over to Jordan.
Thank you, Tony. As she mentioned, today we're going to be discussing the importance of open communication between a mortgage company's branches and their finance department. But before we jump in, I want to cover our introductions. My name is Jordan Pavelka, and I'm the Marketing and Communications Manager at Loan Vision. And I'm joined by our Director of Sales and Marketing, Carl Wolof. I also have the pleasure of introducing Janet Mccleskey, who is the CFO at Gold Star Mortgage Group, or Mortgage Financial Group, sorry. While Gold Star is a relatively new member to TMC, we've been working with Janet for over 4 years now and have been able to learn so much from her and her team. Janet, do you want to introduce yourself a little bit and introduce Gold Star to the TMC? Tell us what a typical day looks like for you.
Sure. Gold Star's in Ann Arbor, Michigan, and we are started out as a branch operations, and we've quickly grown. And in the last 4 or 5 years, we've added a small TPO and some broker business, dipping our toe into wholesale a little bit at a time. We've recently gotten our Fannie Mae and Freddie Mac approval, so we're kind of growing rapidly into that space. We have about 53 branches. Spread across the country. So, have a lot of back and forth with branches about financials. Have a lot to contribute to this conversation. Looking forward to sharing thoughts with all of you.
Thanks, Janet. Moving on, many of today's listeners may be familiar with Kurt Reisig of American Pacific Mortgage, as he often attends the conferences put on by the TMC. However, today we are joined by another huge player on his team, Tricia Soban, who is the Controller and Director of Accounting. In the, about 3 years, I believe it's been, Tricia, since they've been part of the Loan Vision family, she and her team have been able to leverage the system and teach us a few things about it as well. Tricia, do you want to tell us a bit about yourself, about APM and your department?
Sure. Hi. So I've been with APM for about 5 years now. We are licensed in every state except New York. Although most of our presence is west of the Mississippi, we're just moving east of the Mississippi. We have about 265 branches across the states. Last month we funded $2.3 billion, 6,600 loans, give or take 50.
I'm gonna fact check that.
we're growing. It's a great company to work for. I love every minute of it. Love the industry. I've been in the industry for 20 plus years now, and it just never fails to keep me entertained.
Jordan, let me butt in a second. For those of you on the call that don't know me, my name's Carl Wolloff. I'm the Director of Sales and Marketing, as Jordan correctly said. It's a pretty lofty title for the things that I do, but I wanted to just interject quickly and just say a couple of things about Tricia and Janet here before we get started. Both are obviously long time customers. Thank you for that, both of you, if I haven't really said that enough. But we're really fortunate here at Loan Vision to have a great relationship with a lot of our customers, and we really try to harbor that. And I see some others on the call here today, so welcome. But Janet and Tricia are definitely two of my go-tos when I don't understand something, when I don't want to sound like an idiot when I'm talking to somebody else. I call them up and ask them. Shared a few glasses of wine and margaritas over the years as well. So these guys are the best of the best, in my opinion. CFO, controller, respectively. Huge parts of the organizations. I've known, Tricia, I've obviously worked and know your CFO is your kind of immediate line manager, I guess, over the years, and the faith they have in you, and Janet, just a presence whenever you talk. So thank you so much for doing this, and looking really forward to hearing what you have to say on the call today. And I know the group that have joined us will learn a lot from both of your experiences. So thank you.
Thank you for the invite.
Alrighty, so before we jump into the meat of today's presentation, I want to kind of set the scene a little bit for those of you who may not be familiar with Loan Vision, just to help you understand where exactly we sit within an organization, give you some insight into why branch financial information is a topic that we're a little bit passionate about. As you may or may not know, Loan Vision is a mortgage industry specific accounting solution, and this little wheel over here on the right gives you a bit of an idea of everything the solution does. At its core, it is a loan level general ledger, meaning we offer controls around mortgage accounting process, as well as reconciliation tools, loan level profitability, and a lot more than that. We also have the usual fun things that an accounting system needs, like AP, cash, financial reporting, even compensation modules and interim servicing tools. That being said, we are here to focus, as we mentioned, on a very specific topic that forms part of our reporting suite, our web-based branch reporting function. Having been built on a leading financial system from Microsoft, Loan Vision brings the best of class financial functionality to the mortgage industry, serving lenders of all sizes and business models in both the private and public sectors. Well, I love talking about us. Let's take a look at what we'll actually be covering and the real reason you're joining us today. On the screen, you should now see the list of points we'd like to cover. However, we are posing this as a discussion, so we may not follow in this exact order or get exactly to all of them because all of us are talkers. We also want this to be interactive. So if you have any questions or you want to chime in, as Tony said earlier, we're watching the Q&A in the chat boxes. Obviously, our main theme today is surrounding branch communication. However, we first want to introduce you to where Gold Star and APM finance departments were before they brought on Loan Vision, the challenges that they faced in their day-to-day, and what attracted them to us. We're also going to discuss what communication they had with their branches at that time, how they were sharing their financial information, and exactly how the inefficiencies were affecting their short and long-term financial decisions. This is going to
also, sorry, Jordan, I was going to say, we'll also get into some conversation about, how these companies in particular look at the tools available to them as recruitment tools, how they use them to reinforce kind of performance and things like that. So, Jordan, I think people can read, so I wouldn't necessarily go through every single one of these. I would jump into our first kind of discussion point and let Tricia and Janet kind of tell us what their departments looked like before finding Loan Vision. Janet, do you want to lead us off and take the first pitch of the day, I guess?
Sure. It seems like yesterday, but it was, I think we're in our 4th year, going into our 4th year being on Loan Vision, and previously we were on QuickBooks, if you can imagine. And things were very rudimentary. There's no visibility to branches. They didn't have access to QuickBooks. We were PDFing them copies of financial statements well past the other portion of this is the closing function. It took 2 to 4 weeks. So by the time we were getting them a P&L, it was close to the end of the next month. And the other piece of it is we spent so much time just describing and trying to help them understand what the difference was between their P&L now and where they were, or when it was issued and where they are now, that we really were wasting a lot of time and inefficiently talking about what those old numbers meant today. So it was very cumbersome. It was not very transparent, and it wasn't very meaningful for the branches to look at. And so they got very bored of trying to figure out what happened 60 days ago, 45 days ago, and translate that into what they should be doing today.
And Tricia, do you have some similar sentiments, or what was it like before you guys were on Loan Vision? Was it 2017, 2018?
Yeah, I think we've been on for about 3 years now, and our world before Loan Vision was very similar to what Janet explained. We were not quite on QuickBooks, we were on Sage 100, but it might as well have been a DOS-based system. It was really clunky, not at all designed for our line of business. We would create PDF versions of the financials and deliver them out to the branches, and it would be at least 2 to 3 weeks into the next month before they would get that. So by the time they're getting it, they've moved on.
Yeah.
And it was just really clunky like that.
Which, I mean, even with the PDFs, they're not very telling, correct? Because it's not like they have all of the detail in those PDFs that you guys are sending out, correct?
Yeah, that's a great question, Jordan. What information were you sharing through the PDF?
So we would send 2 different reports. We would send the PDF version of the financials, balance sheet or income statement, P&L. Then we would also couple that with a data dump of the transaction level detail, and that would be an Excel version. But again, it didn't have fields that would made it very easy for them to research and dig in. We were having, like, loan number would be put in the comment field, but it would be inconsistent on where you might find it. It might be at the beginning of a comment field, it might be in the middle, it might be in the end. So having that consistency was not there. It didn't make it really easy for them to understand and dig in and research anything. So
the other piece I wanted to mention too, which I just forgot till we were talking about it, honestly, is I had a person whose job it was on a weekly basis to email everybody's check register. It's very similarly to what you just said, Tricia, as an Excel sheet, just so they could know what we had paid, what their balance was, what had happened in their account, what had been deposited, what had not, on a weekly basis. So that was somebody's actual job, is to put together these Excel sheets and email them out to branches. I had forgotten how bad that was. So along with a PDF that is a P&L that was very short and very, very brief, and you couldn't click. Obviously, it's a hard copy. You can't click on anything. You would have to call and ask questions, schedule time with us to find out, hey, what's in this number? Is it right? Is it wrong? What's it comprised of? So very time consuming.
Sounds to me like it was very manual, very like you said, very time consuming. It was people's roles. It was very limiting with what they could see, and that's not unusual of what we've seen across the industry. QuickBooks is a great tool, but it's a generic accounting system. So Sage, again, great, fantastic tools. Great for for newer organizations, if you need to get something up and running, but it doesn't necessarily house the functionality that you're looking for in a system specifically designed for your industry. Great points. Jordan, did you want to move on to our next question?
Yeah. So how are these affecting? I mean, we talked a little bit about how the data was typically, older, but how is that really affecting the long-term financial decisions of the branches and your company as a whole? I mean, I would imagine that would hinder some decisions.
Yeah, it really just didn't give them the visibility into their financials to be able to make educated business decisions, in my opinion, right? It kind of hampered their ability to do that because they didn't really have a tool that was really built for that.
Right.
And so the conversations a lot of times was around getting them to trust the numbers that we were reporting. And because it didn't come in a real nice package that would allow them the ability to dig in and get comfortable with the numbers, it led to not trusting the numbers and thinking that if it wasn't what they expected, or if they didn't make as much money as they thought they should have given their production that month, something must be wrong. And so it led to that, and it ties their hands a little bit on making those business decisions. They don't have all the information they need to make smart ones.
Well, I mean, and on top of that, correct me if I'm wrong, but in our experience, many times we've heard that branch managers are, typically just really great loan officers who have been able to move up their ranks. So they're more operational, and sales focused, which they should be. I'm not saying that that's a bad thing, but they tend to be hyper focused on production goals, and that hyper focus kind of takes away from, again, what we've seen, the longevity and the success of branches relying on the management of both those production and those expenses. So were they really able to understand, did they have a deep understanding of what you were sending them?
I think they didn't.
Like,
And in a lot of our cases, like you said, we have a lot of high performing salespeople as branch managers who they're good at, sales, and some of them they're learning about their business. But it was so intransparent, and it was so muddled with, it wasn't that old, but to them it was, because salespeople live in the moment, and so like I said, we spent a lot of time even just walking them through the differences between their cash balance today and what their P&L that I was sending them 3 weeks to 4 weeks later said. And so I think we really lost a lot of people in that translation, where they just say, oh, yep, I'm, I don't get it. I can't follow you. So I'm just gonna, check out on this conversation a little bit. And so it was really hard to keep their attention, because it wasn't meaningful information to them. It was all in the past.
Yeah.
So.
What level as well? What level was it at, guys? Was it, purely their branch operation? So this is how much your branch is making, or did you try and get further down into, okay, this is what your LOs might be making, or this was what you might be making per product? Did you try and get down to that level?
Couldn't with
You couldn't.
Yeah, no.
You definitely couldn't get to the LO level. It was difficult to get to a loan level. You really couldn't get to that level. It was more, you might research appraisal expense line, but it's done as the branch as a whole. How many times are you paying for an appraisal that the loan doesn't fund, that kind of thing. But it really was hard to do that kind of evaluation because you didn't have the fields that made it easy.
The other thing we were doing a lot too was running reports out of Encompass, and then trying to marry them to the data that was coming out of QuickBooks, which wasn't always perfect or succinct. And then, like Tricia said, it turns into trust issues where, it's their money, and you want to show it to them. The more they can see where it came from, what it was, what it turned into, how it works, the more confidence they have in it and in you. And that was when you were talking about recruiting, when I'm sitting across from a branch right now, That was the biggest handicap for us in the past. When we had QuickBooks, it was always a conversation with branches. In front of me of any import was, I don't trust that the numbers my current employer's giving me are true. They're so old. They're so bifurcated. I can't make heads or tails of it. So I'm presuming that they're not showing me everything. And that's not a great feeling for anybody. And it's not great to be on the other side of that conversation either, because we want them out there spending time doing what they do best, right? Selling loans, building their branch. I don't want them to spend all this time trying to figure out their financials. My goal is to make it as simple as I can while giving them meaningful information they can use and see and digest.
Well, and it seems like that problem is, that's just what it was. You were just basically having to give them a data dump, oh, here's all of your information. This is the best we can do. Whereas, that's different from giving it to them in a way where they can say, okay, here's what it looks like comprehensively. Why is this number? Let's dig deeper into that. You weren't giving them information. You were just giving them data, because that's all you could do.
Yeah,
Absolutely.
it's a great point. Humor me, guys, a second. Okay, the next, I'm going to ask a question which may sound really obvious, and attendees on the call, forgive me as well, but there are some folks that are on the call that I'm not familiar with, and I want to make sure everyone's kind of on the same level here. But in your opinion, Tricia, Janet, what is the value, or what is the importance of branch managers understanding their financials to you? Why did you even give them that information in the first place, even if it was limited in prior world versus what you can do today? Why did you even do that? I'll start with you, Janet. Let's go first this time.
Well, the branch network, they're a huge part of our profitability. The more business they can do, the more they are happy, the more they're out there getting new business, the more profitable they are. That's all great for the company. So if I can incent them and empower them to be understanding their financial future and showing them in hard, cold numbers what they're doing right now, what they're doing well as what they're not doing well, where they could improve, how they stack up to other branches. That's all. They want all that information. They want to see what they're doing compared to other people. They want to look and be able to look on their own at what's working for them and what's not. So, it's our job, like I said, to educate them with the tools that we have so that they can go in there and look and ask us questions that are then meaningful, not, and we can drill down into numbers, not just, did I get all my appraisals repaid? I feel like my appraisal bill is really high. That's kind of a simple question. We're talking about, putting things in basis points so I can see, well, my marketing campaign, whether it's successful or not, this is what it's costing me in basis points, because that's how they think. What are my credit reports in basis points of the business I'm doing? What is it costing me? Different, trying to present things in a different way that speaks not to my accounting acumen, but to theirs. So,
Tricia, anything to follow up?
Yeah, I ditto everything that Janet said. It's really, they need those tools to make the business decision for their business. It's their business, it's their money. Giving them that tool allows them to make the business decisions that can make them more money. And giving them a tool that makes that process easy allows them to spend less time reviewing their financials and more time out there originating loans.
Yeah.
And obviously, the more successful they are, the more successful we are.
Mm-hmm.
I mean,
absolutely.
Having branches that are dragging you down because they're not successful is not fun for anyone. They're not the good conversations.
Yeah.
So
it's
honestly,
important.
the changeover has been more fun for me because I can actually have conversations that are fun conversations instead of all these, trying to get people up to accounting speed.
Yeah, that's a great segue, Janet. Let's talk a little bit about what you are doing now. This session isn't designed to be a demo for Loan Vision. I'm not going to be showing screens or anything like that. But let's very quickly touch on what you guys are doing through the Loan Vision web portal. For those that don't know Loan Vision, there is a specific tool within Loan Vision that presents data in a very easy to consume fashion for non-accounting folks. It can still be leveraged by accounting folks, but typically these folks are branch managers, regional managers, those type of things. So let's touch on very quickly what you are doing today. I'm not asking you guys to give away the secret sauce, right? We sometimes get into these kind of contentious discussions. People saying, well, we do this and not tell anyone else we're doing that. That's fine. Please don't give that away. But just a general overview of what you're trying to share through the portal, and some of the thought behind that. Janet, as I saw, as you were kind of just speaking, do you want to go first? And then Tricia, feel free to sort of chime in and following.
Sure. So one of the things that we built that's been really well received in, I think, the last year is we added something in Loan Vision where they can very easily see their actual cash balance. They can see what we call their reserve that's required to be kept, and they can see what cash they have access to right in that moment. And they can also see what's coming, loans that are already funded that are not yet settled, things like that. So they have a snapshot, which is really important to them to look at. Can I go out, I have this cash, this is what's coming, I know what my payroll is in a glance. Can I spend on a lead buy this week? The phones aren't ringing. What can I do? Can I put a marketing campaign out there? Can I hire another processor? Can I, in this market, trying to hire so many people, can I afford that? And what does it cost me to do? So the KPIs that are shown on there are, some people use them, some people don't, and we're trying to make those be more meaningful, but also drilling down into product-specific profitability. I know we've talked about this, Carl, on a loan officer level. You can have somebody who does a huge amount of volume, but it's kind of interesting when you pull it all together and see what that actual loan officer made for that branch. Might not be what you think. You might be pretty surprised. While that person's getting all the accolades and the President's Club trips, there might be another person in your branch who's making more money for you than that person. And you can't see that with QuickBooks very easily. And this you very easily can.
It's a really great point, Tricia. I'm going to come to you, but just to your point, Janet, we learned that really early on when we put our very first customer onto the Loan Visual branch portal back in 2013. And their big thing was to get to the loan officer level because they did everything at the branch level. And what they found, exactly to your point, was they had these branches that were doing huge volume, and they had these big hitters in the branches that were doing huge volume. But actually, they were making almost no money because their pricing was wrong, their margins were razor thin, they had assistants coming out the wazoo, for want of a better term. They spent huge amounts on marketing. They were just throwing mud at the wall, and it was sticking in the form of revenue, but they were nowhere near as profitable. So what they actually found was they retrained some folks, they jettisoned some people that like you said were in the big hitters club, but because they were actually pains to deal with, right? They took up a huge amount of resource, they were demanding, they upset folks in the business, but you had no evidence to say, well, this person has a lot of volume, so we have to keep them. When you can get down to that LO level and they can really analyze at that level, it does change how you think about people within the organization. We learned that really early on. But it still amazes me that there's people in the space that don't think at that level, and clearly you guys do. So,
yeah, I think that was one of the most popular features when we rolled out Loan Vision was that P&L by LO, that and the 12-month rolling P&L, and being able to see a side-by-side month over month rather than just your current month snapshot or your prior month snapshot as it was. So those were the two big wins, I think, that excited the branches the most and still do to this day.
Well, and I think that kind of goes back what Janet mentioned, can I hire someone right now? When you have that visibility into your months prior, just because you're doing really great right now, well, what do my numbers typically look like, in the next, 6 months? Let's look back from, the last 12 months and see how I was sitting then as well.
And it gives them that tool to be able to do some performance coaching of the LOs that work for them. Yeah. If an LO is not necessarily being profitable, what can they do to change that?
Yeah. One of the
behaviors do they have that need to change?
Sorry.
Yeah, go ahead.
We back into what's your break even with this new cost? How many loans do you have to close to pay for that processor? How much, we do that on a branch level when we're recruiting to people. We want to see, because everybody lies about their sales, all the salespeople, what they can do.
How dare you?
Cut it in half. They do. You do too, Carl. What is your break even with what your P&L looks like right now? So, it's pretty easy to do and show in Loan Vision. You can manipulate that pretty quickly to show, hey, all I got to do to hire this processor is add 2 loans a month and it's covered. And I know I can add more than 2.
So, okay, we've established that you've now got a tool that makes life easier. It sounds like, there's less work for your teams to do because it's not manual. But from experience, and you've been insulting sales guys the entire time, so I'm going to stick up for us. We have short attention spans. You're right. We are very focused on the moment because it's right. What have you done for me lately mentality, right? So how do you work with these folks to make sure they're actually looking at this stuff? Because it's all well and good saying, right, here's a great tool and this is where you find it and here's your username and password. But what do you guys do to actually get people to adopt it? And Trisha, I'm going to start with you this time, if that's okay.
Well, it's really just that communication, right? We send out communications when the branch financials are ready, and we did trainings, and on the initial rollout, we also trained all of our regional sales force that's out visiting the branches, and they're out there and they promoted the tool and showed them hands-on the tool. So that was great to get them to adopt it. And then once they start seeing what it can do, they quickly get on board. Most of them do. Not all of them ever want to look at it. Some of them never want to look at their financials. As long as they're making money, they're happy. But yeah, that was really what we did to get the adoption and the excitement around the tool and what it could do for them.
Yeah. Janet?
We took a kind of hard line, which I've been known to do.
That doesn't surprise me at all.
Surprise.
Not you.
If you called and asked what was in your bank account, we wouldn't tell you. We would make you log in with us and we would walk you through time and again where you could find that. If you asked what your payroll looked like and you wanted to see your commission schedule, same thing. We would walk you through logging in and looking, because there's the only way to get people to adopt and is to get them comfortable in there, and it doesn't take long. It's just another website that they have to go to and get into, and once they're comfortable, which is pretty simple. But we spent a lot of time where we used to hold people's hands a lot. They call and say, can I have a bonus? Or would say, well, let's see where we should look for that information. Let's log in. And, on Teams, either I would log in because their Loan Vision doesn't look like mine. And I would always tell them that you need to be looking at yours. I can tell you all kinds of things, but yours is yours. And so we would physically walk them through logging in, reset their password if they hadn't, activated, and walk them through. And so they very quickly got up to speed and did it themselves. And my whole thing to them is you can look anytime you want. We have branches on the West Coast that might want to look at something later than I would like to be chatting with them about their P&L. They can go in whenever they want. They can go in at midnight. They can go in when they're not sleeping at 4 o'clock in the morning. And so to have it available to them. The other thing I will tell you is we reduced staff, or we didn't add staff where doing the volume at double and triple that we would have been adding accounting staff like crazy, and we have not increased our accounting staff at all.
I appreciate the plug there, Janet. I'll be honest, that's something that we've seen at a lot of customers, because the tools available to them, if you use them correctly, they absolutely should be able to scale. And Tricia, I think you're the same, right?
Yeah, we have grown, but not nearly by the head count it would have taken in our old environment. So it allowed us to not have to hire head count for a certain length of time. You know, that you reach a certain growth and you're going to need head count, but yeah, not nearly as many head count as we would have needed in our prior environment. That's for sure.
Yeah, I mean, I don't want to make again an obvious statement, but the branches are your customers, right? Yes, the lenders are the branches customers, but the branches are your customers, and you've got to be able to service those folks. Otherwise, they'll just go somewhere else and get better customer service. With that, so yeah. The tool, I mean, is that sounds like that's helped in that regard.
I think it has. I mean, to Janet's point earlier. When they would call the finance team to ask questions, we would show them how they could get it themselves. We would show them how they can see what their branch balance is compared to their reserve requirement, and how everything was at their fingertips. And that most of the time really enjoy that, being able to be self-sufficient and having that transparency in the system. Being able to not just see the transactions, but drilling down into the supporting documentation for those transactions. Yeah. We were forever answering questions about invoices that they had sent to accounts payable and forgetting what it was for. Well, now they can go and remind themselves. And I think that transparency and that being able to be self-sufficient is not just a recruiting tool, but a retention tool as well.
And Janet, I really, Tricia, I think it's that point you made there. I might come back to that in a second, the recruiting piece, because Janet, you've mentioned it a couple of times as well. But Janet, I told you this when we practiced. I really love the approach you took. And Tricia, we've got a very West Coast versus middle of the country, Michigan kind of approach here, right? You've got Kara over on the West Coast, and you've got Janet from Michigan saying, get in there and find it yourself. But both are ways to do it, right? And both have been adopted by different people. But the fact is, you did something, right? I think I've spoken to customers, and we've got some, again, fantastic customers, but there are some people that come back to me after 6-8 months of using the portal, and they'll say, well, yeah, we didn't really get the adoption we were looking for. And I said, well, what did you guys do to drive it? Well, we sent out an email and we told them they could where to find it, but people just don't really log in. I'm like, well, have you done any education calls? Well, we did like a 15-minute training. Okay, what else have you done? Well, not really anything. We thought they'd kind of find it on their own, and that is proven not to work. There's others that have scoring systems, whether you like them or agree with them or not. There's others that have the same kind of approach that you guys do. Janet, I do love the approach. They look, you want to know the answer to this question? Let me log in with you. Let me show you how to do it, and that is the right way to go, because otherwise, you've got to lead that horse to the water, right? Which is essentially what you're doing. So, keeping an eye on time, we've got about 5 minutes left, and we've got a couple of other kind of points to touch on. Just now that you're using the tools and have been for some time, I mean, how is it the information that you're sharing really helped drive branch performance overall, and then ultimately as a company? I mean, have you been able to do any studies around that? Have you been able to find a correlation between that? I mean, what are you guys seeing from a performance improvement standpoint that you can relate back to the information you share now? Janet, I'm going to ask you first.
I'm thinking. Well, like I said, it's a combination. It's a combination of them not having to spend time all this time trying to digest or take all that information and ask, dump it into their own Excel sheets and do whatever it was they were going to do with it. So that's one piece. The other is they're really, like I said, they're really free to be out there doing what they do best, which is selling and building their brand. We use it heavily in recruiting. It's one of the things that is my favorite part of the conversation when we have a prospective branch across from me, because like I said, most of them, whether it's true or not, they don't necessarily have a lot of confidence, faith, or trust in people when it comes to their money. So it's like a big shiny thing when someone hasn't seen something that's so live and relevant and transparent. We haven't done anything with performance rewards or anything like that, but we try to, especially in my group, we try to find ways to interact positively with people over their P&Ls, because people are, when the CFO calls, they always think they're in trouble for something. And so really trying, and that was part of the engagement. I would try to call several branches, and my controller would call several branches a month, not just the ones who are doing well, but also the ones who are doing well, to show them why we thought they were doing so well, what was great, did they have questions, could we help them? Because it's the 80-20 rule. You spend 80% of your time on the 20% that are struggling or in trouble or negative. And really, I feel like some of the branches who do it well probably deserve more of my time to find even better ways, to do or to look and to see, and to educate them, to get them even more up to speed. So we really try to focus on trying to, get some touches with branches through their P&L that is positive. It's not hard to do this year. Everybody's got money and, lots of bonuses.
I think it's still nice to hear sometimes, though, that you're doing good, Yeah.
Tricia, what are your thoughts on that?
Yeah, I think the P&L by LO and that side-by-side performance review, P&L review, where you can look at the 12-month history, I think it's really given the branches the tools they need to make the decisions on their staff that they employ, the expenses that they incur, being able to look at it from a BIPS per loan perspective. It really has allowed them to make smart business decisions that end up making them more money. And so they're happier because they're making more money. So I think it just gives them the tools that they need to make those decisions. And I think we saw a lot of recovery before this craziness. We saw a lot of recovery in our negative branches or branches that were struggling, because it really gave not just us the tool, but the regional sales team that's out there supporting the branches. It gave them the tools in order to help assist the branches in maybe making some tough decisions for their branch so that they will be more profitable.
I think that's a really great point, Tricia, that if I understand that, let me clarify, right? You were saying even before March 17th, when we all got sent home and everything went nuts and then volume went through the roof, you actually saw branches performing better because they had that visibility, because they were able to manage themselves better even during tougher times. Is that a fair statement?
Absolutely, that's true.
That's why I think that's a really good point, is because it actually speaks to something that Martin, our president, talks about. Obviously, Janet, Tricia, Martin Kerr is our president. What happens is when everyone's making money, Martin sits in his office and does whatever he does in there. When things aren't going that well in the industry, Martin gets phone calls from owners saying, well, I've got a loan vision, but the numbers are wrong, or my P&L doesn't look right, or can Loan Vision give me this data? And Martin's response is, well, absolutely, the numbers are right. And yes, it can give you that data. It always could give you that information. The only reason you're interested in it now is because you've now really got to focus on that stuff. So his ethos and his goal is to try and make sure people understand the system can do this in the good times. So he's talking to people right now proactively saying, you should be looking at this stuff. You should be keeping an eye on these things. Just because you're making money doesn't mean you're always going to be making money. So getting your branch managers educated and really focusing on the now, even though that's really hard, I'm sure, because they're so busy, but making sure they understand this stuff now. So back end of next year, which they're forecasting could be rough, they've got those tools. I mean, any thoughts? Any objection to that?
Now's the time to be reviewing your financials and shoring up those expenses that you need to be able to weather the storm. And it absolutely gives them the tool to do that.
Yeah.
Yeah, that's a difference between not liking something, but still knowing what to do, right?
Yeah.
And that's, you know, it might not be fun, but I know what to do. They know what to do.
Is that a bit like eating Brussels sprouts, Janet?
What?
Is that like a bit
Brussels
like
sprouts
eating
are
Brussels?
delicious.
I love Brussels sprouts.
Yeah, but no, really? What's wrong
If
with
you
you?
don't like Brussels sprouts, you're not making them correctly.
I had them for dinner last night. I love Brussels sprouts.
All right, liver. Let's go with liver. But sorry. Anyway,
Okay,
carry on.
liver. No liver.
Okay, now Carl's made it weird.
Yeah.
We're running
that was
out of
my-
time.
That was my segue. Good job,
Yeah.
Carl.
So we're running out of time here. I believe Tony said we had a hard stop at 3:50, and you know, we want to give these folks a little time back in their day. So I first want to thank both Jenna and Trisha for having this conversation with us today. Like Carl said before, you guys are so wonderful to us, and you know, we love having you guys part of the Lone Vision family. We want to thank TMC for letting us have this discussion. I do have one more question though. Did we vote?
I
Did we
did.
vote? All righty, so thank you everyone again. Thank you for participating in today's call. And if you haven't, go vote.
Go vote.
Thank you, guys, Janet, Trisha. Thank you
for
so
having
much.
me.
We really appreciate it.
Well, thank you all. If there are any questions, be sure to put them in the chat, and now is the time. Thank you so much to Carl and to Jordan and to Trisha and to Janet. I promised that would be a lively conversation, and you did not disappoint, because it was a very lively conversation. So much appreciated there. Just a reminder, please feel free to go and check out the 12 days of TMC and join us on December the 1st through December the 18th if you can. Appreciate your time. Appreciate the time for all of the attendees here. We know that everybody is crazy busy, so thank you so much for joining us today. Come back to TMC Connect anytime. Bring anything that you want to learn more about, and we will definitely make that happen for you. Jordan, Carl, thank you for your expertise, and Janet and Trisha, thank you so much for joining in on the conversation. Very much appreciate you guys being part of the network.
Thanks,
Thank
Tony.
you for inviting.
Appreciate it.
Thank you.
Been
We'll
great.
see you guys later, and go vote.
Bye.
Bye.
Have a good one. Bye.